do with these cloud-based software stocks now that the economy is reopening? We just covered results from Workday, a software as a service company that helps businesses automate all sorts of back-office jobs, especially in human resources and finance. And the numbers? Well, we got to dig deep here. See, Workday delivered a slight revenue beat coupled with an earnings miss, but in a topsy-turvy environment with many tech companies missing projections by a mile. I got to tell you, I thought this set of figures seemed downright amazing, especially when there were many doubters whispering there could be a big whiff here. Just the opposite, straight across the board, much better than feared. So let's take a closer look with Aneel Bhushri. He's the straight-shooting co-founder and CEO of Workday to hear more about the quarter and his company's prospects. Mr. Bhushri, welcome back to Mad Money.
Jim, great to hear your voice. It's been a long time.
It's been too long. Now, Aneel, there are times when everything seems to go kerflooey in the world, and I expect a lot of numbers to be down. You hit everything. And not only that, but I think you've also got a couple of deals with one with Microsoft and one with Salesforce that will just accelerate your both earnings and revenue. How are you able to do these kinds of numbers in this environment?
Well, first of all, I just want to say our hearts go out to all those folks affected by COVID-19. It's been a really challenging environment. I'm very proud of our team. You know, we executed really well in this environment. Workday's products are mission critical to businesses, essential businesses, all kinds of businesses. They're dependent on us for closing their books. They're dependent on us for paying their people, for tracking their employees. People are doing a lot of workforce planning right now to adjust for the environment. And our team really stepped up in this last quarter.
Now, I know sorry.
Go ahead. I was just saying on the two announcements, the Salesforce announcement's really critical. We really want to work with them. You know, Mark and I are very close friends, bringing our products closer together to make it easier for people to have one view into how they're going to bring people back to work, into the office.
But also, I remember you telling me, watch this Tom Bogan. He's really smart. He's going to stay with the after you bought Adaptive. I look at this Workday, and for those of us who actually know the product, no more toggle back and forth. It's one page, right?
It's one page, and Tom was really the architect of our partnership with Microsoft, where Microsoft becoming an Adaptive planning customer, and we're going to move Adaptive onto the Azure cloud. So that's also a really great partnership that we get to announce today.
All right, now the rapid bin, when I saw you in the street in San Francisco last, which seems like years ago because it was a beautiful sunny day, was that, you know what, Aneel's really got that human capital thing down, but the financial part that he's been trying to do is stalling out. You can't do those numbers if that's the case. They must both be accelerated.
We had a very strong quarter for financials. You know, everything is given the current environment, which is a challenging environment. But we signed up a Fortune 50 customer, Fannie Mae, as a financials customer. We had many great wins on the planning side. Our procurement applications did really well, which really is a part of finance in many cases. So our new friends at Scout landed Lowe's and Albertsons, really exciting wins for them. But I'd say just in general, for companies that are not in the cloud, I think they're really struggling to run their systems, either whether it's having the people staff or the lack of agility in the legacy systems. And so when the world does get back to normal, I think the cloud companies like us and Salesforce are gonna continue to thrive and probably see an acceleration in the move to the cloud.
Now, I know you do a lot of work with universities. I know that they are really struggling. So a struggling university is more likely to order Workday in order to save money, or less likely to order Workday because they're in disarray?
I would say specifically for higher ed, I think if you take it university by university, some of the smaller universities probably not able to take on a bigger project. Some of the larger universities, well-funded universities, they're still active in the marketplace.
And when I look at what you're doing in terms of the actual money you take in, you started out, and I think it's important. I don't do enough of it, of how horrible COVID has been for families, for things. But I also know, and I know you can never put a dollar amount on these things. But I do want to point out that you had $79 million in additional expenses, which for COVID, which these analysts don't seem to understand, do actually hurt your bottom line.
Just for that quarter, you know, I think we were fortunate to get out early in front of COVID. We shut our offices down early. We had insight into what was happening in Korea and Japan and other locations, in Italy, really sad situation in Italy. So we shut our office down, and then we thought about our employees. And very early on, we decided to give them a 2-week bonus, basically because everybody is struggling in this environment. It might be a significant other's lost a job, or parents are struggling, or childcare. And so we just wanted to get ahead of that. And it was a one-time bonus payment that we did in Q1 to get ahead of it.
The right thing
to make sure our employees were well taken care of.
Last question. I've been working with Mark to learn all about his return to safety, the return back, the reopening. Are you part of that? Because the initiative is extraordinary time for companies that are really trying to figure out how to get back in the world.
That's a big part of the partnership between Work.com and Workday is to really make sure the systems are there. And a collection of CEOs are talking about this topic regularly to make sure we do it in a safe way, and make sure that there are a real set of standards on how to go back. When you're doing business with other companies, how do you make sure that the companies both adhere to the same hygiene standards and sanitation standards? So there's a lot to think through. And, Mark has been at the forefront of that. He's fantastic. We talk fairly regularly. I've talked a lot more to Mark over the last couple of weeks than the last couple quarters, and really enjoy that friendship. It's been great to talk through all these things that we have to do to get people back into the office.
All right. Well, once again, Aneel, congratulations in an incredibly difficult environment to be able to do such a great job for the quarter, and best of luck to you, sir.
Thank you, Jim. Okay. It's good to hear your voice.
Absolutely saying that's Aneel Bhushri, CEO of Workday, a company I've liked for a very long time, WDAY. Look, you read headlines that, will they deliver, not deliver? I am telling you, in this environment, this is an amazing quarter. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.